Warren Buffett is dumping his bank stocks and he's stacking a record-breaking $325 billion in cash. It's the largest cash reserve that he's ever held. So what are his moves telling us? Now here's the thing. Buffett is the ultimate long-term investor and he's pulling out of major bank stocks, including Bank of America. He sold off a huge chunk of Apple too, and now he's got more cash than stocks in his portfolio. It's a level of caution we haven't seen from him in decades. So does he know something that we don't? Are these moves a signal that a massive market crash is looming? Well, in this video, we're going to break down Buffett's recent actions, what they mean for the stock market, and whether this record cash pile is the ultimate warning sign. But here's the twist. While his moves might look like a red flag, there's more to the story than meets the eye. So let's dig into what's really going on and what this means for us. Now, real quick, my name is Mark Moss. I've been a tech-focused VC investor for over a decade. I'm a partner at a leading tech VC hedge fund. I coach business owners on investing, and I'm sharing some of the same data that we use to make long-term decisions. So let's go. All right, so Warren Buffett, record amounts of cash, $325 billion of cash, dumping stocks. What is going on? Now, when an investor like Warren Buffett, one of the most famous, most successful investors in history, is making moves like this, we need to be paying attention. And there's no shortage of headlines all across YouTube and social media talking about this. But the problem for me is that they're trying to get your fear up. They're trying to get a lot of clicks, but they lack the nuance of what's really going on. You know, in my videos, I like to bring you the data, the facts, or what I call the receipts. And just like I like to show you charts because I want to see the size and the speed of a move, I want to show you the data under the hood so we can understand, is it time to panic, like most of the media wants to tell you, or is there something else going on that we can learn from Buffett and apply to our own portfolio? So the first thing is he's dumping what? So we know that he has a record amount of cash, $325 billion, but what is he selling to get that cash? That's an important piece. And then what's he going to do with the cash? Well, the first thing is it's not just any stocks that he's selling. He's not just trimming 10% across the board or something like that. He's selling strategic stocks. Specifically, what is he selling? He's selling bank stocks. This is a big one. Bank of America. We can see that he's dumping at a record rate. One of his main holdings, Berkshire Hathaway, unloaded more Bank of America stock this week, so he's been selling continuously. More bad news, more selling, more bad news, more selling. So it's not just a one-time thing, it's continuing over and over. As a matter of fact, it says here, it sold about 238.7 million, it's a lot, 238.7 million shares, or about 23% of its holdings since mid-July. So it's not just a one-time thing, it's getting worse and worse and worse. Dumping bank stocks specifically. We're going to come back to why bank stocks. What else? He's also been selling Apple. Now, it's important to understand Apple and what he thinks about Apple, and we can see that he's definitely selling it right here. Berkshire Hathaway continued to slash its stake in the tech company as part of a selling spree. So he's selling a lot of certain things, bank stocks, tech stocks. It reduced its position in Apple to $69.9 billion, all the way down, $69 billion. It says in just over a year, Buffett has ditched almost 2/3 of his stake in Apple. Now, I want to come back to a statement that he made about Apple at a recent shareholder meeting, which makes this seem pretty interesting and puzzling, especially considering the timing. But because of these two big sales, selling or not selling, dumping Bank of America and dumping Apple stock, Berkshire now has this record $325 billion in cash. It's unbelievable that a single company or person or whatever you want to call it could have that much money. And just to visualize it, I kind of want to show you what this looks like. Again, the charts are important. Now, this goes all the way back here to 2010. And so you can see this trend going up, 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 up. Here we have about 2020 right here. So it's been going up, and now the cash has completely exploded. But the problem with this is that we also have lots of inflation. So what we want to know is what's the real data behind this, not the what we call nominal, not the total amount of value. We want to look at it in relation to other things. But before we get down that track, let's just keep going and see exactly what we should be thinking, or maybe what he's thinking. So is this giving us a warning? And if so, warning us of what? Well, we know there's lots of, I can't call them black swan events because we see them. Maybe they're gray swan events. Or we just know there's lots of potential landmines out there in the market and the economy that could go off at any given time. And it's interesting because, again, Warren Buffett is a long-term investor. His partner, Charlie Munger, said a bunch of interesting quotes. One I use all the time is that the big money is not made in the buying and the selling. The big money is made in the waiting. So they're long-term investors. Warren Buffett talks about how if every new investor came into their career knowing they had only 20 moves, that's it, they'd outperform everybody else. So they're all about long-term investing. Warren's held Coca-Cola since like 1965. He brags about that, See's Candy, things like that. He's owned forever. So to see a long-term investor selling, why? What is going on? Well, is it the persistent inflation? So the Fed is now pivoting, but inflation's not going away. As a matter of fact, it's raging back right now. Is it the interest rate hike? So the Fed is raising rates, and then now they're lowering rates, but now bond yields are going up even though they're lowering rates. That's a problem. Is it the global instability? Not just the election, potential, nuclear wars happening all over the world, things like that. Is it the U.S. debt levels? The fiscal debt is a big problem, and not just for the United States. People around the world, the BIS, the IMF are even warning that the U.S.'s debt is unsustainable. So it could be any number of these or all of them, and more importantly, is it one or all of these things, and what should we be doing? Should we be bracing for impact like Uncle Warren? Should we be dumping our stocks? Well, let's just take a look at that and see exactly what's going on. Okay, so what we want to understand is why he's doing this. And again, if we look at some things he said at shareholder meetings and some of these different things, we can start to get a better understanding. Remember, we don't want to panic off of a headline. We want to dig in, peek behind the hood, and see what's going on. So the first thing is, banks are crashing. You've probably been seeing the headlines. We know in 2023, we had a couple banks go collapse. We know just last week another bank collapsed. And we know that banks are collapsing, probably a lot more banks collapsing in our near future. They've been caught offsides by the bond yields. And so we can see that, as a matter of fact, banks right now are sitting on the largest amount of unrealized losses that we've seen in history. So here's a chart of banks since 2006, and this is their profits and losses. And what we can see right now is they're sitting on an enormous amount of losses, the worst in history. And so, one, do you want to own banks when they're sitting on all these losses and more banks will probably be going out of business? Probably not. I wouldn't want to. I don't own any bank stocks. And I think maybe Warren is opening up to that. Now, why are they crashing? Again, we need to understand these things. Well, we know that commercial banks are buying treasuries at the fastest pace since the pandemic. So the banks are buying the treasuries. Because of the way the bond market is working, the treasuries are becoming worthless, which is causing the bank to have the worst unrealized losses they've had in history, and they're continuing to do it. They're continuing to do the same thing that's causing massive problems for them. Why? Why are they doing that? And what does this tell us about the future? Well, the reason why is for a number of reasons. One, who's going to buy the U.S. government's treasuries if the banks don't? Foreign buying demand has completely diminished, or at least gone down quite a bit. Foreign central banks think twice on U.S. treasuries, so the foreign central banks don't want to buy them anymore. And so I made a video, it's probably been a year or two ago, talking about how the banks were going to become like basically utilities, meaning they're going to be used by the government in order to get the treasuries out in the market and not really so much for you and I to be invested into. That's why I don't invest into banks. Maybe that's what Warren Buffett is seeing. We can see in this headline right here, banks are binging on bonds, but not because they want to. Not because they want to. If the foreign buying demand goes away, who's going to pick them up? Well, it's going to be the commercial banks, which is going to continue to have worse and worse returns, or the largest unrealized losses we've seen in history, and potentially some banks going out of business. Now, Warren Buffett doesn't want to be holding those types of assets that are basically a utility. They're buying assets not because they want to, not because they think they'll have great performance, but because they have to. And that means that the performance of those banks is going to be greatly diminished, and many of them will probably go out of business. Now, I don't want to own them. Obviously, Warren Buffett doesn't want either. Now, does that mean that I should be worried that banks are going to collapse like all these headlines are trying to get you all scared about? No, not really. I think depositors will be made whole by the FDIC, but I don't want to own them. They're not going to be good performing businesses. Okay, what else can we see? Well, potentially we can see some hints from his addressment at his last shareholder meeting. We can see here that Buffett's kind words for Apple. So why is he selling? We just went over Bank of America. Why is he selling Apple? Extended to May this year at the Berkshire's annual meeting. He lauded Apple as, quote, an even better one. Better than what? Better than Coca-Cola, better than American Express. So he was just saying in May that Apple was a better investment than Coca-Cola, that he's owned for 50, 60 years, and American Express. When asked why he'd sold some of Apple stock, they asked him, during the first quarter, Buffett alluded to tax rates. He said selling now would benefit Berkshire shareholders should the U.S. raise capital gains taxes. And so we have the Biden and Harris administration, potentially now a Harris administration, saying that they're going to raise taxes. And so a lot of people are starting to angle for that. And so let's start trimming the fat now. Let's deal with these taxes at this rate before they go much higher. Maybe that's what it is. So maybe it was the banks are crashing. Maybe it's taxes. But I think more importantly, what we have to understand here is that there's sort of like this regime change. And we want to look at not just the data of the nominal amount or the $325 billion, that's this shocking number. But what we really want to look at is the ratio between cash and total portfolios. What percentage of his total portfolio is in cash? That's the most important thing for me to look at, because the $325 billion is affected by inflation. I want to see as a percentage, and what we can see, going back to this chart since 1995, this is the percentage, the ratio of cash of the total portfolio of Berkshire Hathaway. And what we can see is during 2008, it got very high. We can see during 2020, it got very high. And we can see right here, it's gotten very high. So the $325 billion is a great number for headlines. And it's great to get you to click on this video. But I want to bring some sanity back to the market. Sorry if you like the fear. I want to bring some sanity back and say that, yes, it's a lot of cash, $325 billion. But as a percentage of total portfolio, it's high. And yes, it's high around the 2008 market, high around the 2020 market, which are not good markets to compare to. But it's not that unusual. It's on the high side, but it's not alarmingly crazy high. Okay, the other thing to keep in mind is that while this is at the high end of their historic, averages, again, it's not alarmingly high. It's on the high side for sure, and especially compared to these other two things. But we want to understand also what's really going on. As I said, there's sort of this regime change, if you will. And so obviously, he wants to get out of bank stocks. Again, I'm not owning bank stocks. I wouldn't recommend owning bank stocks. If I own them, I'd be selling them also. So he sold this massive cash position, billions and billions of dollars of that. And he's also taking some cream off of Apple, possibly because what he talked about with taxes. But the problem for him is not the problem for you and I. The problem for him is that now he has about $325 billion. What do you do with that? You see, I like to play in the high growth areas, mostly around tech stocks. We'll talk about that in a little bit, where I like to put my money. But you can't deploy $300 billion into those. You can't deploy $300 billion into Bitcoin or a lot of these smaller players that I like to be in. So where do you put $325 billion? Again, his problem is not the same as our problem. The other thing to keep in mind is that right now, that is sitting in U.S. Treasuries. And that is throwing off about $16 billion a year in just free cash flow. So if you're a shareholder of Berkshire Hathaway, or you had that, you'd probably be pretty happy to get $16 billion a year for free money, for sitting and waiting. Remember, Warren Buffett says 20 moves in your career. So Charlie Munger said the big money's made in the waiting. So he's perfectly fine waiting for the next big opportunity. We're going through this regime change right now, and collecting $16 billion a year before he takes that next fat pitch. Okay, now what does this mean for you and I? Okay, well, first of all, is he telling us to caution? Is he saying we should take a look? Or is he waving the red flag like, warning, get out? Well, in my opinion, we should definitely pay attention to what he's doing, and we should adjust based off of that. Again, if you own bank stocks, probably not a good place to be. So for example, I don't believe as a depositor, my money at the bank is at risk. The FDIC will make me whole. The Fed, the government will make me whole. However, if I own bank stocks and they go down, just like we saw in 2023, I could lose my investment into the bank. So I wouldn't want to own bank stocks, number one. If I'm in banks, I'm out. But again, we're not the same. I don't have $325 billion to invest. And so if you want to invest your $10,000, your $100,000, even your millions, not a big deal. There's lots of places for those to go. And so I say that we want to stay to the plan. We want to focus on our high growth, the assets like I talk about in these quantum leap, these tech cycles. That's AI, Bitcoin, decentralization, the convergence of those things. Commodities, real things. Those are still a good place to go. Gold obviously is on a tear. He doesn't like gold, but don't blame that on gold. It's because he doesn't buy assets that don't produce things. But we want to focus on high growth. We're not the same. That's my thing. That's my reading. But I want to know what you think. Do you think that the $325 billion is a sign for you to get out? Or do you have cooler heads prevailing based off of the data and the insights that he's left for us? Let me know in the comments down below. Let me know if you like this video. Give me a thumbs up if you do. If you don't, I don't know, give me a thumbs down. But at least tell me why in the comments down below. Hit subscribe if you're not already subscribed. And that's what I got, all right? To your success. I'm out.